Yeah, it's working now.
Okay.
Okay. You clicked on the wrong rating, that's why. You have to click on that rating. Okay, sir. So I can go and click on
Okay. Yeah. I'm trying to tell other people to join. Please tell them to use it, to use the same old ID, because I have two people now. So other can also join. I'm telling them to join. So we can start right away. I know Idris, you are with me. Please tell them in the house that they should join with the same ID that you used. I only have two people here now. I'm still waiting for others. You can send a message to them. I told them already. All right. Emmanuel has sent them a message. Okay, thank you. Thank you very much for sending that message to them. Now, a lot has happened, and I want to say that the daily signal that people actually, they were in, we've done that for a month now, and at least there's testimony somebody increasing his account by 80% within that 4 weeks. And but the most important thing is even not the signal. We must have the right signal, but how to manage the right signal is also very important. How to manage the right signal is also very, 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 very important. And what I'm about teaching today is very relevant and sacrosanct to us winning trades and managing our trades very well. I shared it yesterday with the other group, and despite the fact that they were on it, some of them are still trying to join today because it actually opened up. They were able to see so many things, and if you really want to make a whole lot of gain in Forex, then you must know how we do what we do. Like I told us last week, I said, you don't get married to someone in a relationship and you expect the person to just do what you want. And the way it works is that both of you must understand each other. You must understand one another in a relationship. So I liken Forex to, a marriage between two couples. And I said that you can't just pray and wish the Forex to do what you want, and what you want is money, and what you want is to grow your account. You can't wish that for Forex, and you must understand the behavior. You must understand what Forex does, how it operates, how Forex is engineered. So once you understand the way Forex is engineered, then you are good. So you won't be trading with fear. You understand yourself. So what I'm about teaching today, it's even when you have signal, you want to see your own account yourself. You want to see the trade yourself. Even if anybody is sending you signal, you want to see things as it works yourself. So it's not, oh, you are giving me signal and I don't know what is running in the market. So you must know how everything plays out in the market. And that is where the power you have So you have power over your account and you understand it. And that is what we want to talk about. Now to start today, again, I like to start this way to show you my chart. And my chart, you can see that it's a weekly chart. You can see here where I put my cursor, and we have a pound yen. I won't be talking so much about DXY today, but I will be talking so much about understanding what you have in front of you. It's very key. You must understand what is laid in front of you, okay? And one of the key ingredients that you know is this, that you need is this. You must look at this candle. You must be able to draw this area of what resistance and support that I have highlighted. I use my own color code for me to understand and see and spot that quickly. Now, the areas of reversals on weekly chart is where I put my dotted blue lines, where price had reversed. But there are also areas of reversals during, or let's say pullback, important areas of pullback, and those are the areas that I use my pink color, my dotted pink color on. So for instance, this particular candle was March 16, 2020. So, and this particular candle here was December 9, 2019. So what we're trying to say is that this trade got to the peak here, and they did pretty much of consolidation around this area, and they reversed to move the price down to this area. So now, the area of the week, you can see my week here, that this particular support is on the week. I don't want to also ignore that when I'm doing analysis. I want to put that there. But where we concentrate most of the time is the area where, the bodies at the level of the body, the top of the bodies or the base of the body. That is where we concentrate most. And we know that the areas where we have the weak, it probably is volatility. And those are the areas that the banks and the big boys look for to chop anybody out of the market. And so you must also not ignore those areas. But the areas that you are likely to be, to be brought into the trade, they are the areas of the body, close to the body of the candle. For instance, if this trade just hold on a minute, I'm just trying to admit these people. Anytime Dr. Shaya wants to come in, I think he comes in a double. I don't know if he uses a double device, I don't know. Okay, maybe he will join later. So I've admitted him. So now, it is very important when you are picking these areas of reversals that at this point, where I have this, this is the body of this bullish candle, and this is the bearish candle. So if I'm going to put my resistance as in this case, it must touch that area. So that area is very important where the price can pick me or I can exit trade. It's very important to return the price and send it back down. So that's the meaning of that. But at the same time, I have to consider, this other area also was also important in the past. So I can't go back to the history. I can't just begin to trace that because it would defeat the purpose of what I'm about teaching. So, but I'm just saying it because all these areas you can see, it was support here, and it was also resistance here to the weak. These lines have been drawn, based on what I taught us. And if you want to know that again, it won't be today. We'll probably refer to that. But it's on weekly candles or chart that you can draw those areas here and those areas here. But we add it close to the body of the, we have to hold it very close to the body where you're likely to. So that is sorted. Now, one thing I want you to see is this. Wherever you see a candle opens and it closed somewhere, another one will open there. So for instance, if you look at this particular candle here, this bearish candle, if you see this particular bearish candle, this one, this candle opened here at the top here and it closed here. So I want you to understand that. And though there is a wick, a small wick to this point, to this level. So there is a wick to this level. It opened here and it closed here. Exactly where it opened or it closed, another one opened, and this also closed here. So the candle we opened and closed, but the wick here represents activity actually got to this place. So the seller got to this place and they pushed it back. But the areas of the closure is what we want to concentrate. And after this one closed, another one opened exactly there. And it closed here. So the bearish candle, we opened below and closed on the top. No, sorry, the bearish candle opened above and closed below. But the bullish candle will open below and closed above. You must understand that. So with that understanding, I want to introduce you to something. Assuming that we are going to concentrate on these areas, 1, 2, 3 weeks. The yen has been selling sterling for the past 1, 2, 3 weeks. And you can see that the body of the candle was big here and it's now small. It was initially big and is now small. It's not likely that you're going to have 3 big candles against price. It's not likely within a week. The same way is going to happen within days if you're looking at daily candle or 4-hourly candle. The price will move. There is always a point where price will consolidate and allow for the position to correct or reset the market. That happens. But when you are trading and you are seeing price movement, the areas you are going to concentrate on is these areas as price is approaching them. These areas as price are approaching them, price will not just approach them and just pierce through. Something must have happened, and to allow some momentum to build up, before they actually move again. Like this one didn't just cross. You are seeing it didn't just cross. Something must have happened before it moved further. Now, this one opened here and closed here. We are going to look at this price on daily basis. And that is where I'm going. I'm switching to daily candle now. Good. I'm switching to daily candle. Before I come here, I want you to see these points. These are daily candles. Anytime you are trading with the flow of the trend, because from here now we are downtrend, there is something you must do on daily basis. There's something you must do on daily basis. And when you are trading pullbacks, you must know that you are trading pullbacks. On daily basis, if you are trading a particular trend, this is what you will see. You can see that 1, 2 big candles and another day for the opposition. This candle and consolidation. And after this consolidation, you can see that, okay, 1, 2, or look, okay, this one is the end of the consolidation. You now have 1, 2, 3 candles. And now you now have this one happening here. So when you move in a trend, a day or so will be for the opposition. And when you are going to have a major pullback to a trend, you are likely to see movement of price against you for about 3 days before the trend continues. That's the way it plays out. So if you think you are trading a pullback, but the trend that you are seeing is climbing more than 2-3 days, then you should know that it's not a pullback, it's a new trend. But I will explain and you will get it clearly. What should I do every time I trade? Every day, you know that a candle, a new candle, will start forming at 12:01 in the middle of the night. And exactly 12 midnight, the second day, that candle will close. Another one will continue to open. You can guide your trade. You can see what is happening, what will work and what will not work by looking at your opening of the candle and the closing of the candle. And you can mark that out, even though you have these important levels of support and resistance that you have predetermined to guide you. So what do? I come here to pick horizontal line, and I will use wine for my when I sell. Okay, I'm going to pick wine for when I sell. I will pick wine for when I sell. Okay, so let me use this thickness, the second thickness here. That's what I'm going to use. So I will look at which area that candle opened. So the candle actually opened here. I'm starting with this candle here. It's a bit above it. Dr. Shayo is having difficulty entering. I don't know why. I don't know why he has this problem. So now it has to be sitting right on top. Good. So that's the opening of that candle. You can draw as many, you continue to follow your price because it's your money. Then where it closed, once it's 12 midnight, you mark that out. Now you will see that there is no wick. Let me take this one to one side. There is no wick on top of this one. But where you have the wick, like this below here, you would do something, you would put this wine directly to touch. But now, because I'm touching that one, I want to change something there because it's just the wick is not that important. I will use this. And if it's too tiny for the purpose of the training, let me do something. For the purpose of this training, let me use this for this. And those important areas, let me pick the third thickness so that you can see. Yeah, those important areas, let me pick the third thickness so that you can see. And I hope everybody can see very well now. So this candle opened here and closed here, but the wick got to this point. The wick of this candle got to this point. Now, exactly where this one closed, another one opened. So, and this one also closed here. So I'm going to put it there that this one also closed here. Okay, this one also closed here. So where it closed, the bullish candle also opened. Okay, now, again, I'm going to do something around this area. I want you to see something. Now, for my bullish candle, I will be using green because the bullish candle opened exactly here and closed really here. It closed here. So I'll be using green for that. Let me use deep green for that. Okay. Let me use green for that. Because that was movement against my price. Good. I have that. So this one opened there and it it closed here against the price. But of course, the price also got to this wick. It sent wick above, so I can't ignore. I will still come to the wick below. The wick below here. Then I will come to the wick also above my bullish candle here. I want you to, so I'm going to now change the thickness of that to be different from the where we have the main closing. So this one, I'm going to change the thickness to 2 for the purpose of the trade, so to differentiate, and this one also to 2 for the purpose of this trading. So you can see those ones are lighter. The ones that are bold, they are the areas of the opening of the market of this candle, and it closed there. That is the bullish. And again, where it closed is where the new bearish candle opened, and it closed below here. So I'm going to also represent that before I explain further. I'm going to put that, so good. So I want you to continue. So, but again, the wick also got to this point. I have to represent that wick. The wick of that last candle, the second thickness. So I have to come to the wick of it just like that. So the wick also is represented. So the next candles that you will see, they mark the area of more or less consolidations. So which you have to see, those areas of consolidation. So now for these ones, the same way, you still have to also look at where this one closed, another one opened with a small body. All that you have to consider and draw, and you continue to draw. But now let me just regard these areas as the areas of consolidation, okay? Maybe what I would just consider again is this candle here for the purpose of this teaching. So it also opened above here where this bullish candle did open. So let me just consider that one also. It opened above here. Okay, it opened above there and it closed below. Let me just change the thickness. Now, then I have to also look at this wick in this region. I will interpret everything for you to understand. So this week, I will interpret everything for you to understand. And let me take this week also, the week of the this. Now, these areas of consolidation, I will soon change something here, so for you to see. Now, this new candle opened up here and closed down here. So let's do it. We are doing everything. It closed there. It closed there. And another one also opened there and closed below here. Okay. So another one opened there and closed below here. Oh, good. Open there and closed below here. Okay. So now I have to take into consideration the week. Okay. This week is taken. And again, the week here below the price here. I have to take this week, the last week here into consideration. Okay. So that's the last week, and I change the week to this. Okay. So I've considered the opening of each candle and the closing of each candle. Now I have my bullish here, but somehow they are working together. So, but let me concentrate here first. Now, assuming you are trading and you are selling from this point to this point, and this closed here, the best place to enter is at the closure of a particular candle. So where a candle will close is where another one will open. So if I'm able to catch that, okay, this price is going to close, immediately it closed here, the daily candle closed here, that is when to actually open, which is around 1201 or 1202. And when it opens, you want to think that the trade will continue to move in the bearish direction. But the trade can do otherwise. Now, how do we interpret our move and what we need to do to safeguard our account? So this opened here and closed below here. And I'm still in this trade thinking that it's going to go all the way down. And when this one forms, of course, you won't see if it's a bullish or a bearish candle. What will happen is that this can start with a bearish and end later. It can do bearish for like 12 hours or 16 hours. And in the last 8 hours, it will now close as a bullish. That is what also happens on the 4-hour candle, on the 1-hour candle. So when you see those candles forming and it's against the color of your trade, it doesn't mean that it's going to end against the color of your trade. So it can start against you and end in your favor. But all you have to do is to wait for 24 hours for that candle to close to now decide to determine what is going to happen next. Likewise on 4-hour. So what do I do? We sold from here to this point. Another one I know for sure we open here. Where the candle will go, to the extent maybe it's going to go far down or far up, I don't know. But one thing you must do almost immediately is, number one, you have to calculate how many pips you have between here and this area. So once you calculate from the opening of this candle to the base where it closed, it gives you about 224 pips. I look for the midpoint. The midpoint of that is 112 pips. So I come to 112. This is 112 pips at the price of 138,776. 138,776. So let me use another color for the purpose of the teaching and put it at 138,776. So 138,776. That's the middle. So it means that I don't expect to have 100% retracement back to this point. If that happens, then I should know that this trade is changing course. Most of the time, even if it's going to send its wick, a long wick, they don't go beyond the 50% mark of the previous candle. So if I'm taking this trade and I want to enter here, where do I put my stop loss? I put my stop loss at the opening of the previous candle where it opened. And if there is a wick that is there, I have to go a bit above the wick. I have to respect that wick. Otherwise, the candle will come and take me out. So it means that if I am going to enter this trade at this point where this one closed, maybe I have not entered before and I'm entering for the first time. So if I enter at this point, that means I want to put my stop loss above here on the daily candle, because I don't expect the daily candle to go back immediately and do an 100% retracement. And if it's going to do 100% retracement, I will see it within 24 hours. But of course, I would have put my stop loss a bit above that candle to guide myself of just losing my money anyhow. So I watch, and this might just be a movement because the body of the candle might actually be here at first, where you have the tail. You know, the tail got to this point, the level of the green. So the body might be there before, and they now forced it down. So the fact that this is a movement against me, and it's closed in this manner, I know that it's just a pullback for that day. There is no real intention to change the trend. The day I will know that they are going to change the trend is when the candle, I want you to listen carefully, is when the other day candle gets to the level of the previous day candle and probably send a wick above it. What are you waiting for? There's nothing happening again. That's the meaning. Now, let's concentrate in this area. Now, this candle was selling, it opened here. Of course, the wick got to this point, it opened here and closed here. Another one opened here and closed here. Now see, this one opened here and closed there. Oh, I say it's bearish. I don't have to worry about the nature of the candle that is coming next. See, here, this one opened. It might open as a bullish or as a bearish, but I have to wait until it closed for me to get early signal and early warning in my life. Now, the early warning that this thing is giving me is that after it closed not just bullish, it closed with its tail, overrunning this one. The previous bearish candle, the tail of it has gone up above it. I should know that thing, the end of sell is imminent. That's the meaning. I should know as a trader that the end of trend is imminent because this has been able to push to this level and send a wick slightly above it. Price will always give us enough time to say, maybe I want to change course. Now, the next day, it went a bit again and broke this level up here, and this one is also happening. Now, what is happening here is that the price is trying to make a move to break upward. And this will be nothing but a pullback. Because the trend is the yen is selling, but again, we can trade a pullback. You don't want to wait until most of your money is lost in a pullback. Then you are second guessing the market. Do they want to reverse? It won't make any sense because you can actually see if the trend is being broken the next day. So, previous day, the next day, the tail went ahead of it. I think you tell yourself, this is not just a pullback because my pullback has run over this one. And again, you have to watch that this also is going to happen because look at this base here is an important word, important level of support that the wick sent the wick there and the other wick also got there and they returned the price. So that means they are rejecting the price at this moment. And they will give you enough time to cash out. And you have your money delivered to you without losing much. Now, how do I get out? How do I get out of this trade like this trade? Because I know where I put my stop loss. If I enter this trade opens here now. I mean, closed here. Another one open here. So if I enter a trade here, I want to put my stop loss not at the level of the opening here, but at the just slightly above the wick here. Market won't just move like that within 24 hours without you knowing. Even if it's after 12 hours that you are checking your trade and you see that, oh, maybe by the time you divide this, what's the midpoint? And the thing has gotten to half of it, or a bit above half of it, then it's telling you that I hope reversal does not want to occur already, or that they want to do a major pullback already. That is how to interpret. And you can do that within 12 hours, 16 hours. Now, let's assume something that, okay, this particular trade eventually did like 100% retracement. And you are afraid, I would have lost money. Don't worry. The level where a trade opens, price have a knack of retesting the area before pulling away. So for instance, now, this one opened here, and closed here. This one opened at the base and closed on top of here. So this will be a good area for you to leave the market. Now let's see how much time it's going to give you. I'm going to change that color for you to see how much time it will give you that you can actually exit your trade. And assuming this one closed and you discover here, let me use another color to demarcate that. Okay, this actually closed there. Let me use, what do I use? Let me use this one. Good. That we know actually, this one has told us that, oh, I'm changing gear because the wick has run above of this one. So, and this is the level where it actually closed. It opened here and closed there. I have to look at that as my reference point. What do I do? Let's now switch to 24-hour candle. Now with my 4-hour candle, so this is where the thing actually made the intention that the thing went above this particular candle. And so what do I see? I have opportunity of leaving the trade after I saw this at this level or at this level. So the price will play at this level for long. See, they are still touching this level for how long? For 4 hours. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and 14. So 14 4-hour candles. Even if you have 10 of them, that's 40 hours. So the thing has given you like 2 days to exit. What are you waiting for? So even if it has gone up here, they will still come back and test that level where that candle, the new candle, actually closed. So what I'm trying to say invariably is that even if this thing pushed up to this point and you saw your account in red, the level you can exit this trade will be here within 24 hours. If you had gone past 24 hours and you were still blind to see, the level you could exit this trade is now to look at the level of the wick here and the level of the closure here, find the midpoint. The midpoint will be around here. Price will also still get in the middle of that to do what? To exit. So you will still exit here without closing much in a loss, because from this level of the week to the level where the price, yeah, that's like 49 pips. So half of that is just like 25 pips. So you will lose 25 pips. You would have saved a whole lot. You would have saved a whole lot. But within 24 hours of the price actually breaking out, they still can retest the lower limit, which is here, where you will not lose anything. But within 48 hours, you still have opportunity of decent exit. It's only when we don't see, we are waiting for Eyegun to Bojowa to come and give us bread, and we don't see things ourselves, that we lose money. Assuming that this thing even has no good intention. Are you following me? If it has no good intention and you say, oh, it's like it's going up and again it's like it's buying out, you will know. You can always re-enter. So now, how do I approach this market? After what I've said, I don't use 4-hour candle to interpret anything. I use my daily candle to confirm if they want to change guard for, probably briefly, they want to change guard briefly. You need your 24 hours candle to determine that. So, and you can now say, okay, I want to exit. But you don't just exit, because let me tell you one thing. Let me switch back to daily candle. I told us that we can draw trend and look at our trend. And this is a trend line, a trend resistance, because I'm selling. what you can do is that every 24 hours, you can look at your trend line if it's still working well. You can modify your trend line within every 24 hours if it's working